Welcome to our charitable gifting session of the Advanced Estate Planning course. We're going to be covering charitable gifting this next 4 weeks, and I want you to be aware right now that this is very important with your clients. One is many clients' culture encourages a gift. Second, there are other people who may not have a culture gift, but they want to save taxes. And we're going to find in the next 4 weeks that one of the better tax-saving devices available for the average person is charitable gifting. And certainly for the wealthy, it's an extremely valuable method. So let's get started. Our objectives: at the end of this module, you'll be able to differentiate a charity from other not-for-profits. I think a lot of people are surprised that there are not-for-profits besides charities. Describe the restrictions on charities that qualify for special tax treatment, and yes, indeed, there are restrictions today, much more than in the past. Discuss the difference between a public and private charity, entirely different purposes of both of them, and understand the difference between a private operating foundation and a private non-operating foundation. If that isn't confusing, you're pretty good, but we will clear it up in a few minutes as we go through. Expenditures by charities. There's really no restriction on expenditures for management and administration of charities. And unfortunately, that means that we have charities that use less than 10% for charitable purposes, and they're still tax deductible. And even though it's less than 10% for charitable purposes, it's even worse because that includes many times workers' salaries and travel costs, and sometimes even entertainment costs. So the mere fact that it's a charity doesn't mean it's being spent right. Now, how money is spent can affect the organization's tax-exempt status, and I almost said that with a straight face. That is just one of the few elements involved. And finally, the IRS takes a case-by-case subjective approach to reviewing expenditures. I think we've all heard about the period a few years ago where the Tea Party went through excruciating review. Sometimes the IRS does, and sometimes they don't. From my experiences, they probably didn't do much more against the Tea Party than they do many other organizations. Charities are a type of nonprofit organization, surprising to most people. Most people think of nonprofit associated with charities, and yet besides charities, there's religious organizations such as churches, and educational institutions such as CLU, scientific organizations that do research, literacy organizations, testing for public safety, fostering amateur sports, and preventing cruelty to children or animals. Those are the things that can be non-for-profits, and they are called Section 501c3 organizations because they all fall under the right to get out of paying taxes. Nonprofits. Now, remember, the big difference between a profit and nonprofit is dividends paid. All companies and all organizations have to have capital investments. All organizations will find that they may be subject to taxes, even though they're a charity. So the big difference is payment of dividends. Other than that, they're really the same. Charities' tax return. The IRS files tax returns to determine the charity is fulfilling its mission, and it reviews those returns. If the IRS believes funds are misspent, it will revoke the tax-exempt status, which is very rare, and restriction on payment to board members of the charity is in effect. However, you can earn pretty good salaries on the board, irrespective. The watchdogs help financial planners do their due diligence, and again, you really, before you recommend any charity, have to do your due diligence. You're a fiduciary, remember that. And I've listed 3 here, which are very well known, very well used. They're very hard to get to because you just put the name in the search engine and it'll pop up. And you'll be able to check out any qualified charity, any charity that is authorized on the IRS. You can even get their tax returns. For example, one of the first things I did before working for Cal Lutheran is I looked at their tax return, and I think it was about 55 pages at the time. And whenever I've been involved with Cal Fed's soccer team, the Box Nerd, I looked at their tax returns. So The tax return doesn't show profits, but it shows where the money is spent and how it's spent a great deal. These three organizations are all good. Again, just put their name in the search engine. That's all it takes. Financial Planners Foundation provides pro bono service and assistance to planners. I think most of you are unaware of the fact that this foundation exists. If you want to do pro bono activities, it's fantastic. And I know a lot of people getting started in financial planning say, I don't know what financial planning is. Well, one of the ways to learn, quite honestly, is to do pro bono work. Because you're going to see how important financial planning is. You're also going to have an opportunity to use your skills and not be charged with a fiduciary responsibility because you're not getting paid for it. This organization provides advice. It also gives small grants to planners performing pro bono work. The grants tend to be, I think, about $1,500. I would say anybody who wants to, however, get into a lot of charitable gifting, which can be a very profitable area for you to specialize in, should really talk to people at this foundation to get all the information they give, because they really give you good information. In fact, I hate to admit it, but their information is a hell of a lot better than mine. They are really experienced. Establishing a charity is as not-for-profit. Well, first thing, you have to submit a Form 1023, and that means you have to have an Articles of Incorporation or a trust agreement, because all charitable organizations have to be incorporated or be a trust, and you have to do this before you submit it to the IRS for issuance. So this means you probably have to give yourself a couple of months time period before forming a charity. You also have a statement of the organizational purposes and its dedication of assets strictly for exempt purposes, and that statement has to be written up. There's boilerplate that's available through, for example, the foundation, and also on the internet a lot, because there's certain motherhood words you need, and any financial statements are required if you've been in practice already. Churches have special rules, and they're exempt from filing 1023s. I would say the easiest way to make money in this country is to form a church. I hate to say that, but it's true. I know when I was a younger person, people would get out of the military by going through a correspondence school in Tennessee, and for $1,200 got their degree in divinity. And then they would start a church out of their house, which they had every Sunday, and they got all sorts of tax benefits. And I think it's probably still available. Advantage is the 501c3 status, which includes more than just charities. Our donations are deductible for income tax and estate tax purpose of the donor. It's also, in most states, recognized the 503Cs as being tax deductible. I say most states, you have to check your state law. And that covers not only income tax, but also, as mentioned here, property taxes. Again, it may be for state purposes. It's really designed for federal. In fact, some states like California have special rules. Of course, California is always going to be different. 501c3 restrictions. Private parties cannot benefit from the earnings of the charity. Limit on activities to influence legislation, and that's very careful, as those of you who remember the Tea Party material and why it was justified to ask for more information. Cannot participate in any political campaign, which should be obvious. Must limit purposes to accomplish only items called out in slide 3. And the social aspects of the organization are limited. I mean, it's not supposed to be a social club. And when I think of that, I think of some of the churches have bingo games to get people to be interested in it and make a little money. That can't be the primary purpose. Another one is I had American Legion I used to fill out the taxes for. If their main goal was really to have a bar that was tax exempt, it didn't work, because the IRS is very concerned about those social organizations, and they have to pay taxes on it. Types of 501c organizations: there's public charities, and there's non-public charity foundations. And I've given you a list of some of the non-public foundations that you may have heard of, such as Amnesty International, Save the Children, Australian Red Cross. I might note that they have to be an American foundation to be on the qualified list, and if it's not American, it's probably not going to be there. Although some companies and organizations have been able to get on the American Qualified Charitable List, that's not true for most. Normal for a charity to receive at least 1/3 of its support from contributions, grants, fees, and receipts from exempt activities, and no more than 1/3 may come from gross investment income or net unrelated business, because they don't want it to be a business. They want it to be where people give out of their benefit. And a business for profit is really a stigma, although a lot of charities invest in businesses to build up their foundation. There's two types of private foundations, which are not the normal, what we think of as charitable gifting. One is the private operating foundation, and the other is the private non-operating foundation. We'll spend a lot of time in this course on those, because that is something, both of these are very good for your clients, and many of your clients may start them. Private operation foundations directly involved in active conduct of educational, charitable, and religious purposes. They must distribute for active conduct for its function at least 2/3 of its minimum investment return, which is 5% of the total fair market value of the foundation assets, and use 85% or less of the adjusted net income or minimum investment return. Obviously, you need a CPA. All of the private operating foundations will be using CPAs. Otherwise, you're going to get yourself in a lot of trouble. And there's a number of complicated rules beyond the level of this class, because it's for CPAs. Private nonprofit foundations must distribute all of its contributions to charities. It's subject to 2% excise tax on net investment income. See, there's a tax on a charity. And more detailed coverage is on week 8. So when we get to 8, we'll be covering it. State regulations of charities varies drastically, state to state. Information on state laws and regulations is found at this website. You can see what your state requires, and again, California is probably one of the most restrictive. And California also releases a lot of information that none of the other states release. A summary: in this module, you learn the different types of not-for-profit organizations, the basic requirements of being a qualified charitable organization, the restriction on the charitable organizations, and the major types of charitable organizations. And with that, we're going to be done for this module.